Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, first of all, let me quickly excuse myself as regards to the visuals, as you wouldn't be seeing my screen this morning due to some technical issues. Trying to update my camera software, which is ongoing at this moment, and it will likely take about a longer period of time, so I had to continue with the live session so that we do not delay, so I wouldn't delay you, of course. So please bear with me on this one. And so good morning everyone, and trust you all doing very well. And I'm so excited to be with you here this morning, as we will be taking another fresh new look at the financial market. So I welcome you to the second edition of the Forex Morning Mastery for this week, your daily dose of financial insights and trading strategies. My own name is Sheriff Daramola, and for the next 30-40 minutes I'm going to be your host. And of course, I will be taking you on a trading journey where we shall be evaluating the financial market from a technical standpoint, using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And well, the last 24 hours has been quite a little bit of subdued trading activity, I would say. And of course, we do know why that has happened, as we obviously witnessed the US public holiday yesterday, which of course made the US economy closed for the day. And as a result of this, the market was a little bit sluggish, though we had some little bit of traction during the later part of yesterday stroke the Asian session due to some various factors which we will be discussing in a moment. And it's also important for us to note that there is a likelihood of positive traction to pick up today, considering the fact that after a public holiday like this, we usually see market participants put up quite a lot of positions ahead of the opening of the resumption of market resumption, and this could likely spike a traction in a particular direction. So what we are going to be doing today is to see how we can strategically position ourselves in such a way that we can capitalize on that opportunity when it finally happens. So I encourage us all to stay tuned in so that you don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining me for the first time, I'm very excited to have you around with me this morning. And I know you will be wondering what the Forex Morning Mastery session is all about. Well, I usually share a couple of videos during the course of the weekend which details what my plans are for the new week. And the Forex Morning Mastery was born out of the necessity to do follow-up details real time on this asset on a daily basis. So as technical traders, we usually gather here every day, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of both the London and the New York session. The session officially kickstarts about 8:05 a.m. UTC, 9:05 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on the insights that we will be sharing today. And please do not forget that my aim here in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, trust me, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business. And for those of you that has been with me for a while now, you know how important this is. We want to be keeping tabs with the fundamental factors that is likely going to be influencing the market sentiment today. And these fundamental factors usually reflect on the charts in technical patterns and price movement. So by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and better timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we are monitoring for this week, we have been focusing on economic features from both the United States and the Japanese economic docket. Now, for yesterday, we really do not have any high impactful event. And of course, I went further to include the mid-tier economic features, but as in fact with that one too as well, we never had any event for yesterday. Now, for today, Tuesday, February 20th, we only have a couple of events from the Japanese economic docket, which everyone will be looking forward to. So I'm going to be touching on the most important one, which has a tendency of influencing the market sentiment for today and tomorrow, of course. Now, the first one we will be looking at is the merchandise trade balance total, which is released by the Ministry of Finance. And this data here measures the balance amount between import and export. So a positive value shows a trade surplus, while a negative value shows a trade deficit. And we know how the Japanese economy is so much dependent on exports, and so that simply means that the economy relies heavily on this perspective. So we shall be looking forward to what the actual data will be. However, if we look at the previous data for the month of December, it came in at 62.1 billion Japanese yen, which was quite considerably on the positive side. And based on what is on ground right now, economists are projecting a deficit of $1,925 billion Japanese yen, which is not something that is encouraging at all, considering the fact that the Japanese economy is trying to come out of the current inflation and as well try to beat the current the technical recession they are in. Remember, last week we saw the GDP data from Japanese economy came in below expectation, coming at a deficit of about I can't remember the figure, I think about deficit of 3% thereabout. And the previous quarter also came in at a deficit of about 0.3. And of course, when from in the financial paradigm, when there is two consecutive contraction in a particular economy, it is suggested that our economy is technically in recession. So this is not a good sign at all, but we're still going to look forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? So we shall be looking at the USDJPY chart to see how we can strategically position ourselves for the next move. So I encourage you to stay tuned in so you don't miss out on this valuable idea. So with that being said, here we shall be diving right into the business for today, and so we shall be moving right into the chart. And I see your comment here, Princess Abulu Okwe. Good morning to you. Glad to have you around after such a long time. It's been a while since I heard from you. Trust you are doing very well, Princess. All right, so the first asset we will be taking on today is going to be the USOILSPOT. And on the USOILSPOT, we have quite an interesting situation going on. in the market right now. And of course, yesterday we did emphasize the fact that the observation of the President's Day, which is a public holiday in the United States, may influence the way market participants will react in this market, leading into a situation where we might be seeing an extended sideways trading activity. And if you look at what has been happening here, price action has actually been in a range for a while now. During our live session yesterday, what did we see and how did we intended to take advantage of any trading opportunity at this point? Now, before I go into the details here, I would like to emphasize the importance for you to watch our top-down analysis on this particular asset. So yesterday I did a top-down analysis on the US Oil Spot, where we were able to identify key levels, patterns, and structures that we will be using to guide our trading decisions for this week. So I encourage you to go ahead and watch that video. If you missed that session in any way, you can find the link to that video right in the comment section of this current video you are watching. So please go ahead and check it after the live session. So going back into the charts, so we shall be focusing on the 1 hour time frame, which is our execution time frame, of course. And right here on the 1 hour time frame, the first thing we observed at the beginning of the week was the fact that price action was confined within the range between the $78 level and the $77.60 area to emphasize the prevailing uncertainty going on in the market at this particular point in time. And considering the fact that price action was still trading above the ascending trend line we projected on the 4 hours time frame, it made quite a lot of sense for us to look out for patterns and structures that supports the idea of buying this asset. So with this information in mind, we said we will be buying the US Oil Spot at the breakout of the $78 area, and with a buy stop order above that structure, we did capitalize on this opportunity, and we saw price moved about 47 pips thereabout, but has since been falling into a range since that particular moment. And for those of you who are with me on both my TradingView and Telegram platform, I did mention that we should be securing this current position, as we never can tell what could happen going forward. And I do hope you moved your stop losses accordingly. For me, moved my stop losses to the entry points, and let's see how far this momentum will go. Now, with a well secured position at this juncture, what is going to be our next line of action? What is our plans for today? Are we going to continue buying, or will the key level at the $78.50 level continue to be a barrier for buyers, hereby pushing price in such a way that it breaks down and retests the ascending trend line to incite selling opportunity? Well, the last 24 hours has seen an uptick in buying activities, of course, and this is going on amidst heightened concerns as regards to the potential disruption to oil supply from the Middle East. And of course, we know how the geopolitical tension in the Middle East is going at the particular moment. We saw the Houthi attacks yesterday, and we also had the EU and the United Kingdom planning to join forces into the Red Sea to protect that region at this point in time. So the tension in the Middle East is still ongoing, and this could further support prices of US oil, the US oil asset at this point in time. Then another factor that is supporting the energy market at this point, remember yesterday was the resumption from the public holiday in China, the lunar holiday. I think it's the lunar holiday they call it. So yesterday they resumed from the 1 week long holiday, and activities became buoyant. And one of the things that we had from the Japanese economic docket was the positive economic development, where the People's Bank of China has chosen to maintain its 1 year loan prime rate, that is the LPR, at 3.45%. However, they also lowered the 5 year LPR by 25 basis points from 4.20% to 3.95% in efforts to bolster their economy. Now, what does this simply mean, and how does this impact the US oil market? Well, first of all, we all know how important the Chinese economy is as regards to the energy market. Being the largest importer of oil commodity in the world, if the Chinese economy is doing very well, it transitions into a high demand from oil in the global market. So everyone wants to see the Chinese economy do well, especially in the energy market, so they can start buying this asset. Now, what does this simply mean? What I just explained earlier. Now, what this simply mean is that the People's Bank of China decided to keep the interest rate for loans that last for 1 year the same at 3.45%. Now, this means that if someone in China wants to borrow money for a year, they will still have to pay the same amount of interest they did last year. However, they also lowered the interest rate for loans that last for 5 years by 0.25%, so from 4.20% from last year to 3.95% for this year. Now, this means that if someone wants to borrow money for a longer period, like 5 years, they will now pay less interest on that loan. Now, this decision is made to help China's struggling economy by reducing the interest rates. The People's Bank of China hopes that more people and businesses will borrow money. And when people and businesses borrow money, they tend to spend more, invest in new projects, and expand their businesses at the same time. Now, this increased spending and investment can help stimulate economic growth and support the overall economy of China. So this is a very good way to actually increase liquidity in that economy, and this could dovetail to a robust economy and of course increase demand in oil. So now, additionally, we also learned of the annual tourism revenue the Chinese government made during the National Lunar Year holiday period, which was quite significant. And given this all these factors, how do we intend to capitalize on the next move? Are there chances that buyers will continue the momentum to the upside, or is there a way that we could see sellers come in, probably in an attempt to retrace the previous impulsive move? Now, looking at things from a technical standpoint, so the buy position has now been taken out, had worst case scenario break even at this point, and the fact that price still remains above the ascending trend line still opens the idea of buying this asset for this week. However, if we look at the structure closely, remember yesterday I did mention that the $78.50 level had been a strong barrier for buyers since the month of November of last year, and as a result of this area is known to be a strong selling niche in this particular market. And of course, despite the bullish traction we witnessed yesterday, we saw how as soon as price got into that level or zone, let me put it that way, we begin to see selling pressure resume again from that particular area, further emphasizing how strong the sellers are at this point in time. Now, with this information on the chart, we cannot ignore the potentials that sellers could come in at any point in time. And as it is right now, I will be suggesting that look at this $78 area, which beautifully shares a confluence with that ascending trend line. So we shall be looking out for selling opportunities only if both the ascending trend line and the $78 area is broken to the downside. Now, there is a caveat to this trading setup. I would need to see some confirmations before I want to jump into any sell positions here. Now, what are the things I want to see here as confirmation? Well, first of all, price must break down both the $78 area and the ascending trend line before I start considering selling. Now, if price breaks down right here, it doesn't still dovetail to selling opportunities. Yes, as price still remains above the ascending trend line. So we may likely see some choppy situations or market conditions around this area that may lead into such situations where price will finally break down both the ascending trend line and the $78 area. Now, if this happens, we want to be getting ready to sell. Now, what I will be looking out for is a retest of the structure to give me confirmation before joining any bearish move to the downside. Now, there are two ways to which we can capitalize on this opportunity. For those of you who have been with me for a while, you know how this works. If you are profitable so far on this asset, your portfolio is positive on the USOILSPOT, you can afford to place a sell stop order below the structure to capitalize on the bearish move. However, if you are new with us and this is your first time taking a position, that means you do not have any leverage to bank on or risk to test waters around that area, so you will just have to follow the second option by waiting for a retest of structure, giving us confirmations before jumping into any bearish move. But trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. So that is how we shall hold on to a bearish perspective on this one. Now, with this scenario we have right now, the only condition that will now make me buy is for price action to break out of the $78.50 level. Then I would like to join a bullish move. At this point, when price breaks out of the $78.50 level, we would have a situation where price has finally taken out all the sell positions there to incite an uptrend scenario. So let's see how the market will play out today, as our center of focus for today is basically between the $78.50 area and the $78 area, where depending on the direction of the breakout will give us an insight into where price is likely going. So with this information, it's very important that you mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can use that time as well to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So I just saw your comment here, Juno Aruna. Good morning to you. Glad to have you around with us this morning. Okay, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So we have over 8 people on board, and we have about 3 likes. I would really appreciate your likes. Please give the video a thumbs up. Thank you very much, and continue to support this channel. And the only way you can do so is just by giving the video a like, and thank you very much as you do so. So moving on to the next asset on our watch list. So the next asset on our watch list for today is the USDJPY. USDJPY. And what a wonderful 24 hours we have here, as we saw price action continue to find higher highs and higher lows through the course of the last 24 hours, and especially we saw some beautiful traction during the Asian session as well, as the price of the US dollar against the Japanese yen holds sway just right above that psychological level at the 150.00 area. Now at this juncture, before I go into any details right now, please kindly move all stop losses. I did mention this in my commentary this morning on both my TradingView and Telegram platform, that we should move all our stop losses and secure this current position, as we never can tell, anything could happen, especially as everyone gears up for the resumption of the US economy today. And what some other factors here that may also affect or limit the uptrend situation here is the Bank of Japan's governor's hawkish remark, which we talked about a couple of weeks ago, and it went on to state again on Friday that the central bank will assess the continuation of various easing measures, including negative interest rates, as the achievement of the price target draws near. Now, this is an hawkish comment which could limit the uptrend potential of the USDJPY, so we need to be very cautious, and whatever profit we make from our buy positions, it's important that we judiciously protect them, because anything could happen. Price may crash to the downside anytime soon. Then last week we also had about the comment from one of their policymakers in Japan as regards to the Bank of Japan's readiness to intervene in the FX market if the value of the Japanese yen continues to drop. Now, this is a verbal statement, which we're still yet to see any action, but I know market participants will be wary of this statement and remain cautious in that regard. So we also need to be doing so as well. If we have any profits on any buy position on the USDJPY, it is appropriate that we secure them accordingly, so that we do not get caught up in any sudden push to the downside that may happen anytime. Now, meanwhile, the Federal Reserve Chair Powell, remember, he pushed back against expectations of interest rate cuts in the month of March due to the sticky inflation in the United States. And of course, in the last couple of weeks, we saw how the United States economy has been churning out robust data week in, week out, further emphasizing the resilience of the US economy at this point in time. And this, of course, will further bolster the US dollar, as the expectation for an higher interest rate for an extended period of time is high in the market right now. So with all this in view, the dollar still has a chance of pushing price to the upside, whereas the Japanese yen could still gain leverage from the fact that they will soon pivot from their current ultra loose monetary policy as early as the month of March/April. So all of these factors needs to be taken into consideration while we review the current market structure, and most importantly is that how are the market participants thinking and reacting to this mixed report from both economies. Now, if we look at things from a technical standpoint, remember that we talked about this uptrend, this ascending trend line, which we identified on the 4 hours time frame after capturing the nature of price action since the beginning of this month of February. And when we connected the series of higher lows here, we have this ascending trend line that we said we will be using to guide our trading decisions for this week. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this asset. Now, something interesting happened yesterday, seeing price action break down the ascending trend line for the first time, as you will see right here at the beginning of the week, breaking down that ascending trend line around the 150 0.100 area. Now this breakdown here is a signal that sellers are trying to push price to the downside, and from a technical standpoint, when price breaks down a trend line like this, we expect that some point in time price may come back to retest the trend line in an attempt to continue the downtrend continuation. Now the question now as we head into today's trading session is that as price action retested the ascending trend line right here at the 150.450 to incite a downtrend move, or is there a chance that this level will be broken to the upside to incite more buying opportunity? So at this juncture, I would advise us all to move all our stop losses on all buy positions anywhere within the 150.285 and the 150.200 while we give enough breathing space for price action to move around. Now, with a well secured position at this juncture, I was able to identify a trend line which we will be using to guide our trading decisions for today. And the trend line we are going to be using is right here. After connecting the series of higher lows in the last 24 hours, we have a structure that we can actually use to guide our decisions going forward. So as long as price still remains above this trend line, we shall continue to maintain a bullish bias as price goes to come back into the structure where the 150.285 shares a confluence with that ascending trend line to incite another wave of bullish momentum. However, if this structure is broken to the downside, then I'm of the opinion that we might be seeing the continuation of the downtrend that broke the ascending trend line for the first time this month, and this could be an opportunity to join a decline to the downside. So selling opportunities is guided by the 150.285 and that ascending trend line. So let's mark these levels and structures on our chart as we will be needing them to guide our trading decisions for today. And if price goes ahead to break out of the 150.450, we are going to be into hard more buy put existing trade. So it's a simple setup we have here where price action is currently trading between the 150.450 and 150.285, where depending on the direction of this breakout will give us an idea of where price is likely going for today. So I encourage us all to mark out these levels on our chart as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. And please do not forget to give the video a thumbs up. Your likes are valuable to me, and of course it also helps the algorithm push the video to a wider audience of traders who may find this content beneficial. Thank you very much as you do so. For those who had liked, thank you very much, and for those who are yet to like, please do so. It costs you nothing, and thank you very, very much as you do so. Alright, so in the absence of no questions, let's take this as a confirmation that all I've said so far has been quite comprehensive enough. So in that regard, we shall move on to the final asset on our watch list in a moment. So the last asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And what a beautiful situation we have here on this asset, as the price of gold continues to show signs of increase in momentum, especially leading up to the FOMC, the publication of the FOMC minutes coming up tomorrow. And I'm surprised that price action is actually gaining traction against the US dollar, especially when the US Treasury bond yield is still doing very well. So this to me is coming as a surprise. And with recent robust US economic data, which of course has exceeded all market expectation, market participants have tempered their anticipation for any interest rate cuts in the month of March, and all odds now are pointing at May or June of this year for the first interest rate cut, though we yet to have a detailed timeline to which the Fed Reserve tend to run their easing cycle for the year 2024. So this absence of timeline is in fact causing a little bit of uncertainty in the market at this particular point in time. However, looking at the current structure, we can easily understand how market participants are thinking, and this shifts in bias for May and June for interest rate cuts may of course has to lend support to the US dollar, because when interest rate stays higher for an extended period of time, it is expected that investors will want to take advantage of that differential in value of the US dollar against all other assets to buy more of the US dollar, hereby supporting the ascent of the US dollar. So at this point in time, and looking at a bullish traction in this market, for me it is a suspect. Hence, it is very, very important that we move all our stop losses to secure this position. As we can see, we could be suspecting that major key players in the market may be trying to increase the value of gold in such a way that when the US session resumes, price will just crash to the downside, taking out a lot of people who are banking on this expected bullish momentum. So let's be very, very careful. Now, before we go into the details here, and for the sake of those who missed out on our earlier sessions, let's run through what really happened yesterday. What did we see, and what made us to consider buying this asset yesterday? Now, the first thing we saw yesterday was the fact that price action started the week with a strong bullish note, starting around the $2010.50 level, and it rose into the $2023 area, where we begin to notice selling pressure resume from that particular area. Now, one of the things we said here yesterday is that this might likely be a bullish signal, where we saw price action break out of that descending trend line we identified on the higher time frame. For those of you who are yet to watch my weekend video on the XAUUSD, where I did a detailed top-down analysis on this asset, please, I will encourage you to go ahead and watch that video so you can understand how we got to identify the trend lines you're seeing on this 1 hour time frame. I have the link in the description box below, so please go ahead and check it after the live session to have a background knowledge of how we got to this point. So we saw this trend line broken at the beginning of the week to give us a signal that price action may want to start a bullish momentum at this point. Then in addition to that was this ascending trend line, which we were able to identify after connecting the series of higher lows since last week Wednesday, giving us something to work with ahead of the new week. Now, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we have no business selling this particular asset. And coupled with the breakout of this descending trend line, everything was looking very bullish at the beginning of the week. And as a result of this understanding, we decided to label that area between the 2015 and $2010.50 area as a temporary demand zone for now. Now, you see how this area shared a beautiful confluence with both of the descending trend lines. And in fact, one of the things we were saying here yesterday is that we want to see how far this bearish momentum is going to go. Where is it going to go to as far as this area? That is where the ascending and the descending trend line shares a confluence before the momentum continues to the upside, or is it going to come into this area before the bullish momentum comes in? Now, as a result of this, we had a buy stop order somewhere around here at the 2015 and of course the $2010.50 area, but it sorry for the break in transmission. I had some network or technical issue. I can't even put a name to whatever happened because I'm not sure at this point in time. But I'm very glad that we are back, and sorry for what happened anyways. So we were discussing the XAUUSD chart and what has happened so far, and we were talking about how we are going to be moving all stop losses at this particular point in time to anywhere around the $2018 area, while we also give enough breathing space for price action to move around. Now, at this juncture, we shall continue to look out for more opportunities to buy if price action breaks out of the $2023 area. That's the highest point price action has been for this week, and that is where our resistance line also is. Now, let me quickly state here that the first one is it depends on where you are with us. Now, for those of you who have been in this profitable journey so far, you can afford to place your buy stop order above that structure, as you can afford to leverage on some of the profit we had made so far to test waters around that area. And if it doesn't work, we know that we are only risking some of the profit we made so far. However, if you are new with us, I would advise that you exercise patience and wait for a retest of structure for confirmation before jumping into this position. And this is basically due to the various factors I explained earlier, which for me, I said the momentum we're seeing here is coming to us as a surprise, and we may likely see a build up that is trying to shake out a lot of people who are buying this asset. So please, let's take this into consideration while we continue to monitor price action. So at this point, we shall hold on to a bullish bias since price still remains above that ascending trend line, and then consider selling only when this ascending trend line is broken. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. And of course, we shall continue to monitor this real time during the New York session. I already dropped the link to the XAUUSD live window right in the comment section and pinned at the top in the comment section. So you want to click on that link, click on the notify me button so you can get notified as soon as we come on live. The XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD during the New York session, and it usually kickstarts about 5 to 10 minutes into the New York session and lasts about 5 to 7 hours depending on the volume of trading activities for that particular day. So I look forward to seeing you guys right in the comment section on that platform. So that is that for today on the XAUUSD. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section, and you can also use this break I want to take now for the first 5-10 seconds, which I will be using to see if there are any questions, to mark out these key levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. And do not forget to click on that like button, okay? Thank you very much, guys. All right. So, in the absence of no questions, I guess we are we come to the end of the Forex Morning Mastery for Tuesday's edition. And looking at the structure right now, the buy position on the XAUUSD, second buy position on the XAUUSD just got triggered, had a breakout of the $2,023 area. So let's see how far this is going to go, though I still don't believe in this momentum anyways. But since the market has presented this to us, we have no other choice than to follow through. So with that being said, we have come to the end of the Forex Morning Mastery for Tuesday's edition, and it's on this note I want to appreciate every single one of you. And through the course of the session, we were able to take the 3 financial assets on our watch list, which includes the USOILSPOT, the USDJPY, and finally the XAUUSD, all of which we were able to identify simple trading setups that we will be using to strategically position ourselves for the next move. And I do hope you all marked out these levels accordingly on your chart as we illustrated during the course of the session. If you had done so, well done, kudos to you. So all we just need to do is exercise patience and allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding, we want to have a well-defined risk management strategy in place to mitigate against any risk on our portfolio. And for those of you who are joining us for the first time, glad to have you around with us this morning, and trust you were able to gain 1 or 2 things from what we discussed here today. If you did, you want to be part of the subsequent editions, as the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and at the same time strategically position ourselves for the next move tomorrow, as we all look forward to the FOMC, the publication of the FOMC meeting minute tomorrow, which of course has a tendency of bringing some positive traction into the market tomorrow. So we do want to be on standby to capitalize on that move, so don't miss out on tomorrow's edition too as well. So on this note, I want to wish us all the best of luck today, and looking forward to seeing you all in the comment section of both my TradingView Telegram platform and of course during the XAUUSD live window as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful day, everyone. Bye.